It was a bloodbath on Monday for Australian shares, but they seem to have stabilised a bit today. Will this be the end of the selling, or are we about to resume falling? Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 12th of March, 2024. And before I begin, you do need to be aware that whatever I say is general advice only. It does not consider your personal financial circumstances, and you have to decide whether it's appropriate for you. So I think the key events to remark on this week are the US jobs data from Friday, and then tonight's US CPI data. The US jobs data was probably a little bit stronger than expected. There was a small uptick in unemployment, but most importantly, there were far more jobs created than expected, and that points to continued strength in the US economy. The jobs reading was for the month of February, and many had been expecting things to slow down a bit for the US economy in February, but it wasn't the case according to the jobs report. That does throw into question tonight's CPI reading. CPI is a measure for inflation, and really, Western economies have been battling with inflation since, roughly 2021, 2022. We've seen rapid interest rate rises to deal with it, and many have been hoping that those rates are about to be cut. That's been one of the big drivers for global markets over the past 4 months. However, CPI growth or inflation was stronger than expected in January, and that pushed the rate cut timetable out towards the middle of the year. Many have since expected that CPI will come back down a bit in February, but after the recently strong economic data such as the jobs report, that belief is thrown into question. So tonight's CPI reading, very, very important in determining whether we are going to see near-term US rate cuts. Expectations are that it's going to be somewhat in line, maybe slightly lower than January's numbers, and if that's the case, it's not really pointing to the big slowdown in inflation that's necessary for interest rates to be cut. I think if it continues around the current levels, we will see policymakers hold off on the expected rate cuts for some time. If the CPI is stronger than expected, we might start seeing economists and investors start to push out their rate cut expectations towards the second half of the year, and that's not going to be very good for markets at all. So the CPI reading is perhaps, for me at least, the most important event this month. It will be followed by the Federal Reserve meeting next week, and that'll be a very important one as well, but they kind of go hand in hand. And you can guarantee that at that Fed meeting, the Fed members are going to discuss this CPI reading, what was contained, whether it's coming down, whether they see rate cuts based on the back of it or not. So very important readings there. The jobs data did trigger a bit of selling in the US. They were stable overnight. If we do see, the stronger than expected CPI and it does trigger more selling, we could see a break in the uptrends that have formed in Western markets this year. So very important reading. Bullish investors will want to see that come in lower than expected, and bearish investors or bearish traders will want to see it come in higher than expected. I also wanted to touch on iron ore. Iron ore's fallen roughly 10% across the past week, taking the year-to-date losses since the start of the year to about 20% for iron ore. A pretty big fall in the space of a couple of months for Australia's key commodity, and not really good for the iron ore miners, which make up a fairly large amount of our market. Roughly, I think about just over 20%, just below 30%, somewhere in the 20% range. Obviously with iron ore coming off, that's triggered selling in the major iron ore miners, and that's been a bit of a drag on our market. Iron ore's come off on the back of inventory stockpiles going up in China, which obviously means they need to buy less new stuff. There was comments from Vale, which is the world's second biggest producer out of Brazil, that said that they're looking for buyers outside of China due to weak Chinese demand. Just general weakness in the Chinese economy, their construction sector, other parts of their economy, definitely have slowed down over the past sort of 24 months, and they're demanding less steel as a result. So with the iron ore miners really coming off and being a bit of a drag on our market, it's really the banks that have had to pick up the slack. So the large four banks have really rocketed higher over the past 4 months. We've seen fresh all-time highs reached on CBA. We've seen multi-year highs reached on many of the other banks, and that's sort of held our market up. Keep in mind these banks make up close to 40% of our market. So with the miners coming off, these banks have stepped up to the plate and provided the additional points to push our market higher. Now, I do think that holds a little bit of a risk for our market, and I do think when these banks turn, and they will have to turn at some point, that will be the signal that our market's going to fall. And nothing can rise forever, but the valuations of these banks are historically stretched. I think Barrenjoey analyst Jonathan Mott said that the valuation on CBA is currently at about 1 in 1,000 probability levels, so extremely, extremely high. Now, it doesn't mean they're going to fall immediately, and in fact, mathematical calculations about a stock's value are notoriously inaccurate in the short term. They tend to be more longer term movers of share price. But these banks are very expensive compared to their historical norms. They're very expensive compared to global banks, and that's even after the run that global banks have had over the past 4 months as well. So I do think this is an area of our market to keep a close eye on. When these banks do turn, I think that will herald a turnaround in our own market. So let's have a quick look at the charts for this week, guys. So we'll start with the Australian market, and we can see that it had an extremely bearish session on Monday. It fell about 140, 145 points, almost 2% at the close, and an extremely negative movement. It does come on the back of a bit of selling in the US on Friday, with their markets down around 1%. Comes on the back of a big drop in iron ore. Iron ore fell about 6.5%, 7% for that session, and it does come after an extremely bullish upwards movement. It has held above some pretty key technical levels. So the levels that I'm watching are 7,700 index points, which is this line here. I'll make it orange for everyone. It's held above 7,700, and it has held above the longer term uptrend line. These levels will have to break for further selling to look likely, but if we do have another down day, we will be testing both of these key levels. That is the longer term uptrend line and the 7,700 point level. If we close below those levels, I suspect we'll see a pullback. Look, it may be back to 7,600, it may be all the way back to sort of 7,550. A little early to say at this point, but we are right at this, right at the trend line, right at the support level, and in the coming sessions, we'll know whether we've held that or whether we've broken below it. Looking at the US market, the S&P 500, we can see they've also come back to test their uptrend line. They really are a lot closer to their all-time high than we are, though. Roughly 50 points off it at the current level. They pulled back on Friday night after the jobs data. They tried to tick a bit lower last night, but they held the trend line. Again, like I said before, the CPI reading is going to be key, I think, to determining whether they continue higher or not. If the CPI comes in stronger than expected, we could see a break of this trend line. We could see a bit of selling. We could see a bit of profit taking. The first target on a pullback would be the 50.35 level. That was previously resistance. And if that breaks, I suspect we'll see more selling after that. Again, in the coming sort of 48 hours, we'll know whether these levels have held or whether they've broken and we've seen more selling. So it really is coming to the crux of it, and it's coming right at a point in time where we're going to see the CPI and inflation data. So a pretty important time for markets. We'll know a whole lot more next week. And I suspect whether we hold these trend lines or break lower is going to come down to tonight's US CPI reading. Hopefully you guys enjoyed this one. If you did, let us know below. If you didn't, keep it to yourself. Click the like button, click subscribe, and we'll see you in the next one.